Hi, I'm Candice Baxreason, and today we're going to be discussing our second topic of insurance with Aaron Sabash. And today we're going to be discussing mortgage insurance. So often when myself as a realtor, when I'm dealing with clients, they will go to the bank and they'll talk to their lender about getting their financing, and at the end of that discussion, usually insurance comes up, and often it's mortgage insurance. So do you want to speak a little bit to the difference between, mortgage insurance and some of the other products that you can offer?
Yeah, absolutely. So oftentimes when people are sitting down with a mortgage broker or a lending institution, right before they sign the papers, they'll say, if you were to pass away, would you want your mortgage paid off?
Yeah.
It's kind of a rhetorical question because everyone's going to answer, yes, I'd like this paid off for my spouse. And so there are other options out there, and particularly if we're talking about mortgage life insurance, that would be an individual life insurance policy. There's a number of reasons why people would want to get an individual policy. First, if you were to pass away, the lending institution would get paid, right? So your spouse is actually not going to see any money.
Right.
If you pass away, that mortgage is going to be paid off, but life has changed drastically. So maybe that spouse would be a lot better off receiving a check,
right,
as opposed to now having to maybe sell the house to access that money, right?
And with mortgage insurance too, if you start at a $200,000 mortgage, as that mortgage declines, then the insurance also declines.
Absolutely, yes, yes, and you're paying a steady premium for a declining balance. And I think that would bring me to the next point, is that most of the time, I would say 99% of the time, we're generally able to save people money on their premiums for a comparable amount of personal insurance. Lastly, I think really important to note is if you're sitting at that lending institution, they're going to ask you 3-5 questions about your health and say, great, you're approved.
Right.
But really at the end of the day, if you ever do claim, they're going to need to ask a lot more questions than that. You get an individual policy. All of that due diligence is done up front, whether there's any medical testing involved, but certainly the medical questions will be asked in their entirety. Once that insurance carrier authorizes the coverage, they generally don't ask very many questions if a claim is made.
Yeah, and that's huge.
It's protecting the consumer, really.
Yeah, and that's not something that will come up, right? They're not going to tell you, oh, and by the way, if something happens at the end, that's when you're going to be.
Yeah, we don't want to be one of those horror stories, right? We want to make sure that we're paying for something that is going to pay in the end.
Yeah.
And that peace of mind means a lot to people.
Excellent. Thank you so much. Great tips for people on mortgage insurance.